Welcome to everyone who's joined us. This is a combined event of the South African Chamber in the UK and the BBBEE Chamber that is present with us today online. Thank you very much. This is we believe, about the 7th in our series of BBBEE education for both investors into South Africa and existing companies within South Africa. So a lot of CPD points can be earned, a lot of opportunities and things to learn about things we know a lot about, but don't know a lot about actually, because it is quite a difficult area. So to begin with, first of all, who are the BBBEE Chamber? If you're unaware, they are the largest BBBEE practitioner member-based organization in South Africa, and they just support their members with things like information, guidance, services, software, best practice, consultancy, and making sure that they help you remain compliant in whatever way you need. So we work with them and we are picking up on a very specific topic every month, and we focus on just that one topic, bring in the speakers that are aligned to the content of what we're talking about, and make sure that there is some focus and gain and value to yourselves. To begin today on our session, we're going to talk first of all, you're going to hear from, we're going to hear first of all from Arlene Wilson-Max, who's Stakeholder Relationship Executive for BBBEE Chamber. She's been in the BBBEE space for ages. She's the kind of person you give her something to do and she gets it done, and she gets it done extremely well. And she's got more than one hat on, but I'm not seeing it. I see the BBBEE Chamber hat above your head. And she's the one who steers the organization and making sure that the members are getting the value they're looking for and steering the stakeholder relationships, which is where we come into the engagement with the BBBEE Chamber. So Arlene, I understand you want to share a very fascinating video with us. So please go ahead and share with us the insights and research. And for those of you who are joining us on the next session, we'll be getting updated statistics for current periods and updated intro to these sessions. So Arlene, please go ahead.
Thank you.
BBBEE Chamber. Black economic empowerment has been in place since 2007 and has contributed to the inclusive growth of the South African economy, but it is not working well enough to keep pace with population growth. However, the full potential of BBBEE is not being unlocked because it is only companies that service or supply measured entities that are pressurized to adopt a BBBEE Scorecard, and of those, very few have implemented programs which have been designed to achieve the BBBEE objectives as envisioned in the Act. The objectives of BBBEE require sustainable access to the mainstream economy for the beneficiaries. This in turn requires that Black people are absorbed into income-generating activities as a result of the contributions. Measured entities that have adopted a BBBEE scorecard have made claims for their contributions, but in the vast majority, these companies have failed to optimize absorption from the related contributions, resulting in false claims, as claims should have only been verified if achieving the objectives stated in the Act. Members of the BBBEE Chamber benefit from access to transformation specialists who provide information and guidance on meaningful contributions which are designed to achieve the objectives, reducing unemployment and alleviating poverty. BBBEE Chamber members achieve buy-in and a new level of pride in relation to their contributions, which can be used as marketing differentiators when pitching for business and as an employee value proposition when attracting or retaining talent. Members benefit from the most advanced BBBEE information, guidance, support, development, and software designed to enlighten, enable, and empower BBBEE practitioners. Our team of more than 50 specialists are dedicated to work with members and unlock the full potential of BBBEE for the member and for their beneficiaries. Join today for free as an associate member, or upgrade your membership to Practitioner or Practitioner Plus membership and access more benefits. We welcome you to explore the benefits of each membership on our website. We look forward to welcoming you as a member of the BBBEE Chamber.
Hey, good morning. As Sharon explained, I am the Stakeholder Relations Executive at the BBBEE Chamber, and I'm a little embarrassed to say I played the wrong video. Sorry, Sharon. The video that I actually wanted to play this morning explains why BBBEE exists in South Africa. And it looks at the high unemployment rate in our country. It focuses on making sure that your implementation leads to sustainability, or your contributions towards Black economic empowerment actually leads to sustainable, broad-based Black economic empowerment. And that's so important because every country in the world has got their own empowerment strategy. And ours is specifically related to the 5 elements in the BBBEE Scorecard, which are ownership, management control, skills development, enterprise and supply development, and socioeconomic development. And if you look at those elements of the scorecard, and if you implement BBBEE in the spirit that BBBEE was actually created, then there will be an economic growth in South Africa. So apologies for playing the wrong video. But at least now you know who the BBBEE Chamber is, and that you can all become members of the BBBEE Chamber, and that you've got a team of wonderful experts that can help you to implement and build strategies that lead to sustainable and transformational BBBEE. Thank you.
Thanks, Arlene. I was thinking, this is shorter than I expected. This is not what I remember. Thank you very much. But yes, people do now understand what it's about. Thank you very much for that, Arlene. It's really interesting listening to what you guys are achieving. And your whole point that you made a moment ago is in the spirit of the intention of the Act. And if we stay in the spirit of the intention in any form of regulation, it definitely brings value because it becomes the way we do things here, which is ethical, sustainable, correct, best practice, all those kind of things. Just to introduce Mariette, who is joining us now and going to be giving us a short presentation. Mariette van Beek is the technical specialist for the BBBEE Chamber. She's a chartered accountant and has spent time on a management development program at UNISA, and she spent her time in the verification space, making sure that understanding both the BBBEE Act, codes, the different ways in which we should be doing business. So it's very much on the technical side of how we should be doing things. And she's also very well versed in the SINAS audit requirements as well. Mariette, would you like to join us and share your knowledge?
Sure. Thank you so much, Sharon. I hope you're not going to put me too much on the spots there. Okay, let me quickly start the presentation. So yeah, today we're talking about ownership, a very complex part of the codes. Just to check you are seeing my presentation, right? Great. Okay, so ownership can be one of the most complex things to go through when doing a verification, or it can be one of the easiest depending on how the structure has been set up. I think I'm going to start off with the question, what is ownership? What is being measured and what is the intent behind it? So if we think of anything that we own, let's say a car, a house, we take ownership of that. We make the decisions around what maintenance are we going to do, when are we buying, when are we selling. We have the decision-making capacity or powers around that asset. So we've got, in a sense, a voting right, if you think of it from an ownership perspective. Then there is a return on the investment. So if we think of a property that we bought, we decide to sell it, there's going to be hopefully a profit on that property or property sale. So a return on investment. And that's where the economic interest portion of the ownership component comes in. The growth of the asset over time, as well as the economic benefit from a return on investment. So dividends being declared on that investment. And then lastly, we look at net value. So the growth over a period of time of the value of that asset, and just looking at the difference between what is actually owned as a loan versus what is being owned outright without an encumbrance on that. And when we look at the BBBEE scorecard overall, I'm not going to go into too much detail in here, but that's the 3 main principles that is being measured. Voting rights, so the decision-making capabilities of a shareholder, economic interest, getting a return on investment, so getting dividends, and then net value, having the ability to grow the value of the shares over a period of time, and also get a cash back, if you want to call it that, when you exit the transaction, to say, yes, I've made a profit. What I had to borrow exceeds what we actually come out with. So you make a profit. Yeah, that's overall on the scorecard. So just another overview. So the target, you'll see for Black voting rights and economic interest is sitting at a 25% overall. If you do not meet the 25% target, you get a proportionate amount of the points. So you don't need to get the full target in order to get any points on ownership. So today I'm going to touch on net value. Net value is also the priority element indicator that's being measured under ownership. And then I'm going to look at an alternative structure for multinationals and how to get points on the ownership scorecard without actually doing ownership transaction or sale of share transaction. There is 3 priority elements on the scorecard: ownership, skills development, and then enterprise and supplier development. The ownership is linked to net value, and I'll explain net value in a bit. But it is basically you need to score 3.2 points out of the 8 available points on the ownership scorecard for net value. Otherwise, you drop a level on your overall scorecard once the rating is being done. So I think that's why we're focusing on net value. So what is the net value principle? We have an asset that we want to buy. You can either do that outright in cash if you have the means, or in majority of the cases, you need to go to someone to fund this asset that you want to buy. Portion of it, full value of it, it just depends on what type of stakeholder is coming into an ownership transaction, whether they have the means to support the investment. And then over time, the asset value would hopefully grow, and you would start repaying the funds that were borrowed. So you'd start repaying the loans, which means the loan or the liability value would decrease. And that means that the net value, so the assets less liability value, would increase. And then in the codes, they've actually dotted it out to say, we give you a 10-year period over which you can, or the Black shareholder can then repay the loan or the liability linked to the transaction. So yeah, that is over a 10-year period. We call it the graduation factor matrix. This is just an easier way to display, to say over a period of time, we need to repay any loans associated with that. And then just on the second line, the indicator showing where the discounting principle comes in. So the moment you don't meet 40% of the target, or you fall below the orange line, you would then be discounted on your overall BBEE status. And this is the point where I would normally ask for questions. So just on the ownership ecosystem, this is a quick graphic on what goes into ownership. Ownership transaction types is normally a sale of shares. So an existing shareholder would sell some of their shares, or it would be a subscription to new shares. So authorized shares that is actually being issued. The types of shares would normally be an ordinary share. There could be options or share warrants attached to some of those shares. A lot of technical things that could go into that, but basically an option or a share warrant can only be measured for BBEE purposes if there's the actual cession of rights, and the rights is being attached to your economic interest and the voting rights that we spoke about earlier. And then preference shares as well. Preference shares can either be completely debt in nature. In that case, it's not impacted on your ownership scorecard if there is an equity proportion in that preference share, rights to voting, rights to receive dividends or special dividends, then that could be considered within your ownership scorecard. Okay, and then there's the vast amounts of principles set out in the codes. And today I'm going to focus on 2 of them. We're going to unpack some of the other principles in next month's webinar. The first one I want to touch on is the flow-through principle and modified flow-through principle. Flow-through principle basically measures the effective right that a Black person has in the shareholding of the company. Again, that right is the economic interest and the voting rights. And what we would do in calculating that flow through is you would start at the natural person. And you would flow through per holding company or structure that is set up in the entire ownership structure in order to then get the percentage that's being recognized in the measured entity or the entity actually going for verification. So in this case, you take the 100% and multiply it by the 51% shareholding and then the 25 and the 25% again, giving us a 3.1% recognition on that scorecard then. Modified flow through can be applied where there is a 51% ownership and that is actually being owned, so controlled and managed by a Black person or group of people. In such an instance, you would then treat that organization that is 51% Black owned and controlled as 100%. So this is the exact same flow through, just applying modified flow through in that first juristic person and trust because it is being 100% owned and then a 51% flowing through. So in that it would effectively mean a 6% recognition instead of the 3.1. So it can have a drastic impact on the BBEE scorecard if the modified flow through is actually being applied. There's a couple of rules attached to modified flow through when you can do it and can't do it. I'm not going to go into the details too much, other than saying you can only do it once in your entire ownership structure. So if you get a B certificate for one of the shareholders that has invested in your company, be sure to check that they have not already applied modified flow through on their certificate and then double applying it because that might hinder you when you go for a verification. Okay, and the next one I want to talk about is equity equivalent programs or EEIPs. So this is a measurement principle that's been brought in, especially for foreign multinationals, where you have a company investing in South Africa, you are creating a local subsidiary, so South African Pty that's being registered, and that company operates solely in South Africa. But there is a global policy saying that there is no shares that can be sold to minority investors, which means your holding company would ultimately always remain 100% shareholder of the local subsidiary. In cases like that, the DTI said, okay, we recognize that you cannot sell shares locally. So what can you do to develop Black South African people? And that's why they brought in the equity equivalent program. And what this program basically does is it is a monetary contribution into a development program, mostly focusing on developing Black enterprises or Black communities. And that program runs over a number of periods, and that's in the next slide, depending on the monetary contribution that you actually make. The target is being set at a 4% of your annual turnover or at 25% of the value of your South African operations. So it can be a quite substantial amount that you need to invest into this program. So that would mostly be your first deciding factor. When you do your BE strategies, how much is it going to cost versus the points that you are losing on your overall scorecard for not having ownership. Once you decide, yes, we're going to run with the equity equivalent program, then you need to start putting the program together. You have to lobby with your line ministry to get approval. Then once the line ministry has approved and given you a recognition or letter confirming that they do support you, you go to the DTIC and you register this program. Because we're dealing with different ministry departments, it is quite a lengthy exercise. So we're looking at a 12 to 18 months to actually implement such a program. Okay, and then there's a number of years attached to the value that we can contribute as a measured entity. So it runs from 3 years to 10 years, just depending on what that target value is. When setting up the program, you would get a letter, and it's actually being approved. You would get confirmation from the DTIC to say, yes, you've entered into a program, and then you need to start tracking the implementation of that program over a period. If you are meeting your targets, you get the full points for the program that you have invested in. If you're not meeting the targets, so you've not spent how much you have set out to, or your targets increase, then you get a proportion, and then you recognize spend. Some companies who have successfully implemented EIPs, HP, Dell has done it, Microsoft's a lot of the ICT companies. And then the biggest one is the collaborative one between the automotive industry. So 7 of the automotive companies came together, they set up a EIP program, and it's been successfully running. I think it's now for 2.5 years that that's been implemented. Okay, and then the questions will leave for the next section. Okay, that's it for me, Sharon. Thanks.
Thank you very much. I thoroughly enjoyed that, Marietta. I actually have a couple of questions as well that I'd like to ask, but first, I'd like to introduce Usha. Usha, would you like to join us, please? Welcome, Usha. Usha Jivan is an attorney by profession and the founder, shareholder, and director of BBBEE Score. So she is very much living and breathing this space every day of her life. And she's the one who actually helps you with the actual scoring process, the technology, the environment around which that happens.
Thank you, Sharon. Okay, good afternoon. As Sharon has introduced me by name, I have been in the legal profession for many years and was involved in quite a lot. I was an attorney by profession initially, and then I moved into the education space, and I was a lecturer in law for many years. And I covered many aspects of the law, like criminal law, civil law, family law. Family law ended up being one of my favorites. And that's how I became involved as well in publishing in some law books and 1 or 2 journals. And I also assisted in community in the small claims court many years ago, where people, bring in their cases for trial on a free basis and they're not being charged for it. So I got involved in quite a few community projects whilst I was busy with that. And somebody then approached me at some point because I was lecturing for about 21 years, and I became quite frustrated with it because marking of exam scripts was a nightmare. So when I was introduced to the concept of BE, which was in 2006, long before the codes were actually gazetted, a group of us got together and we thought that we must start a BE rating company. And that's how this journey started. And I then resigned from my job as a lecturer and got started with BEE. And at that stage, my ex-partner, Maria, you probably know Marisha Bond, who now runs Signa Academy. We were partners in the business for a good couple of years, and he and I started developing the policies and procedures for BEE verification. And I haven't looked back since then. We have lots of clients in Gauteng. I've had offices in Johannesburg as well. And our head office is in Durban. And yeah, we've got clients from various sectors. So I think I've got a lot of experience. I've got a very solid team. So I'm trying to move away a bit from actual reviewing of files and doing those kinds of things. But I enjoy what I do. I'm passionate about it. I'm passionate about transformation. And that's where I am. And I will continue to be until I decide that I cannot work any longer.
Usha, there are two things that totally resonated with me in your introduction there. One was lecturing and the time it takes and some of the aspects you have to give, and the papers, the technical bit being the worst. Part I so thoroughly enjoy about lecturing, and I probably do close on 100 hours a year in corporate governance, is the students. That is what I love. I love what I learn from them, and I love what they learn from me, and how years later I'm still in contact with many of those students who turn for advice and guidance. And you realize you're making a difference to people by lecturing. So, but I get that there's the tough side to every job, including that one. Maybe, Usha, we can start chatting on your side to begin with. It's a very technical topic. And I'm just going to ask a really inane, simple question, the simple, keep it simple, stupid type of question. Just tell us where your scorecard is found to be easy to respond to, and what parts of the scorecard are companies or individuals completing them really struggling with, because that will give us some kind of framework of where the regulation through your scorecard is becoming a challenge within a business.
I must tell you from our experience with clients, I think the element where people are struggling a lot with and not kind of obtaining their minimum scores is skills development. It's the training. It's the training element of the scorecard. You've got to spend money.
In my view, I would think that would have been one of the easier bits. So why are companies challenging with that? Maybe
because they've got to spend money. They've actually got to spend quite a lot. And of course, the easier way to do it is to spend money on learnerships and internships and those kinds of things. And it costs. So I find that a lot of the clients are dropping a level, they're being discounted simply because they haven't met the 40% sub-minimum that is required for skills development specifically. Because, I mean, Mariette showed us
the score. What is
40% of the total points of the year. So if it's 20 points or 25 points, it's 40% of your total points, which is a sub-minimum. As Mariette explained when she discussed the ownership as well, which is 25 points, even with ownership, we have challenges there as well.
I'd understand
because again, I mean, it's not as easy, to find a black owner, or I mean, there are very many ways that you can get black ownership, but the difficulty there again is to identify people that can form part of the ownership chain. And you've got to meet a 40% sub-minimum target there, but that target really is what we call net value. So it's skills development, and then I think second to that is ownership, because we call people elements, which is management, control, and employment equity. In some cases, you have control. In very few cases, you have control over that. But largely, there's no control over that, because you choosing your top management, your directors, for example, your non-execs, and even your staff with senior, middle, junior management. There's little room to play around with that. So you're stuck with what you have. Of course, you change staff from time to time, but it's the whole idea. But it's not an element which has a sub-minimum requirement where you can drop a level. So With the management control, it's okay. It's not difficult. It's very straightforward. Our requirements are all set out. We've worked very hard for many years on developing our documentation. And I think with B-BBEE Score, we have very detailed portfolio of evidence lists. So our clients are provided with fantastic documentation. And I mean, it's a no-brainer. When you read through it, you should be able to understand what the requirements are. So I would say those two, because when you look at the B-BBEE Scorecard and you start from bottom up, the easiest way to get your full points is on socioeconomic development, where your target is 1% of your net profit after tax. And you've got to ensure that you pay that towards donations and those kinds of things. So I think that's the easiest from the bottom. And the preferential procurement as well, sometimes you're tied with the suppliers that you have to use. So again, you can choose to have Black-owned suppliers. For example, B-BBEE Score is a level 1, 100% Black female-owned entity. So, for example, if you had to do work with B-Score, for every 100 Rand that you spend with B-Score, you will get 135 Rand of recognition for that procurement. So it depends on the BEE levels. So again, their procurement, in some cases, people are stuck with their suppliers and they don't want to change their suppliers. In other cases, some companies would look out for the higher level BEE suppliers. And that's from level 1 down to level 8, level 8 being the lowest, with a 10% BEE recognition, whilst the level 4 is 100% BEE recognition, and level 1, of course, is the best level. So, yeah.
Thank you very much. That was very, very interesting with those challenges. I'm maybe picking up similarly, Mariette, with yourself around those ownership issues that you covered. If I had to summarize them, where do you see, as from the consulting side you're on, which are the ownership areas that are most challenged? You gave us what we've got to do. We've looked at shares, we've looked at voting rights, we've looked at shareholding percentages, who's holding them. Where do we find the greatest pushback, either by existing shareholders or by the business as a whole?
I think the biggest challenge is sitting with your net value. That's also why it's one of those priority elements, because it is linked to the value of the company and the value of the debt. And if the debt has interest on it, the interest rate movements, and we've seen a lot of that lately. With
we're going to see more
going up
more later this month.
So that's the biggest challenges, is you've got moving components that is not really always set. And sometimes there needs to be a special dividend declared to make sure that you just meet that 40% sub minimum, or not dropping a level. And that's sometimes what companies do. So that's the biggest challenge. The other challenges comes across from implementing a structure that's not properly sound, not in line with the spirit of the codes and the Act, window dressing, or setting up a trust and the results just never flows through to the beneficiaries.
Mm-hmm.
A lot of times that happens with a broad-based ownership scheme, and that's why the BEE Commissioner is also fighting for the rights of the beneficiaries in those schemes.
When you talk about beneficiary in your language, I know what it means in a trust language. What does it mean in your language when you talk about a beneficiary?
For a trust, exactly the same as it would normally be. You've got someone who receives the benefit of dividends flowing through.
And who is that typically?
It depends on the nature of the trust. If it's a family trust, it could be family members. If it is employee ownership scheme, it can be the employees of the organization, different levels, depends on how it's being set up. Broad-based ownership schemes is normally communities. Could be anything from one specific community where the company is operating, maybe to students at university. Mm-hmm. It all depends on how the trust deed is set up.
So the beneficiaries are not linked to the shareholders. it might be stakeholders rather than shareholders?
So I think that's where the commission comes in a lot. So the commissioners, the opinion, they must have the same rights as a shareholder would. They must have that voting right that the shareholder would have, even though it's through trustees. So they must inform the trustees how to vote. So yeah, it's a difficult place to navigate. A lot of interpretational differences. I see Usha's also smiling. I think they're also coming across a
Maybe you want to add some
I think maybe if I just
Marietta?
If I can just add on to what Marietta is saying, and she's absolutely correct. But we being in the verification space, we do a lot of ownership certifications as well. We verify entities just on ownership and not on the full audit. And over the years, we've dealt with some very large organizations with ownership certifications. And just to add on to what Marietta is saying as well, like for example, with the broad-based ownership schemes, you would find that I know that we once did University of Witwatersrand, for example, and they had an ownership scheme, and they had a broad-based ownership scheme. And you've got to identify who the ultimate beneficiaries are. In this case, it's thousands of students, for example, because they've got a separate, they've got a separate entity and a fund. So you get broad-based schemes in various forms. I know that we've done also clients where they've got people situated in all of these remote areas where people get training, for example, as broad-based ownership schemes. But in those particular cases, in any verification, you've got to select samples. So when you select your samples, but the voting happens on behalf of the beneficiaries by the trustees. So the trustees in these instances vote on behalf of the beneficiaries.
So you're saying there is always a trust structure involved in such
yes,
ownerships?
in the broad-based ownership schemes, there's a trust involved in those ones that we have done. Yeah.
Marietta, are there other structures that we tend to see that brings in our Black ownership that's not necessarily through the use of a trust, or a trust in addition to what?
Yeah, so a trust is just one of the vehicles through which ownership can come through a natural person owning shares. It can be a company. So there's various structures in place.
Which are common to companies? Like what do big companies tend to do? What do medium-sized companies and what do smaller companies tend to make that structure look like? We're helping our audience to understand where they be. What is common practice in their size business?
From my experience, from a verification perspective, the bigger companies are choosing to do broad-based ownership schemes. And then some of our ordinary clients, like companies, do the employee share ownership schemes, where the employees are entitled to shares. Then you also get family trusts as well. And there's specific rules for the different types of trusts. So if it's a family trust, for example, there's certain information that we request. We request different information when it's a broad-based scheme and an employee share scheme. But those are all provisions in the codes which allow for various types of ownership structures. And
Mariette, you were going to give some input to that one too?
So yeah, definitely bigger companies tend to bring in a broad-based ownership scheme or employee ownership scheme just purely based on the scorecard. There's points available on the scorecard for those types of structures. So if you're strategic in setting up your scorecard, that would be one of the things that you would consider. But it can also be a combination of both types of schemes, as well as the individual coming in if it's a strategic partner. So it depends on the nature of the business and what the business actually needs at the end of the day and what's the best structure for them.
Marietta, just staying with you, you talked about putting in applications that can take up to over a year, 12 months plus. just go through how does a company operate or not in that application process? What are the steps that happen in that 12 months, or is it a vacuum that occurs? Is there engagement? Yeah, I know sometimes people go here in the UK and they might put their application in for their passport and wait 18 months to hear whether it's not happened or it's got lost. Yeah, and you don't want to wait 18 months or 12 months to find out you haven't progressed anywhere. So what are the operations levels in that chain?
During that time, you'd still focus on the other elements in your scorecard.
Do you want to come closer to the microphone, please? Thank you.
So during that time, you'd still focus on the other elements on your scorecard. So you'd still get your management control skills, ESD, SED points. It just means that you would lose a level on your ownership and you won't get that 25 points. So you're going to score level 8, level 7, thereabouts. And that would be the process up until the time that you actually get the approval letter from the DTIC to say, yes, we're happy with your program and you can start implementing. Depending on where you are within your verification timeframes and how far you are from your next verification, you can get a recertification just on ownership, just to bring in that new recognition of the EEIP program. It's all, at the end of the day, a strategic decision that the business needs to make on what they want to do.
And if you've got, and I'm trying to pigeonhole a type of activity. Let's say we've got a woman working from home. She started up a sole proprietor type of business. It's now started to grow. She's formed a PTY. She's registered for VAT. But she's a B2C customer. So she's not looking to operate with a listed company. She's not trying to be in somebody else's supply chain. And obviously this could be male, female, it could be young, could be old, it could be last career. Whatever that person is doing, where do they fit into this responsibility on BEE, and where might they be challenged?
So I think firstly, you're going to look at the size of that organization. Within BEE, we've got different turnover thresholds that's going to throw you into different scorecards or classes of business. Generally, turnover under R1 would mean that you're exempt micro enterprise. So you're just
under
going to
10 million, right?
10 million, yes. So that's going to mean you just need an affidavit to confirm what the shareholding structure looks like, that the value of revenue for the previous financial year was less than 10 million. And there you go. Those exempt micro enterprises don't need to do anything in addition to that.
But they have to know, they've got to go and get that certificate.
It's an affidavit that they can download from the DTIC's website or from our website.
Mm-hmm.
But there's a lack of knowledge on that.
That's what my question is. How do they know they've got to do it, and what values are going to bring them? Because the consumer is their community.
So mostly that's from a procurement perspective that I think that's being driven. I don't know if you found something else, but if they have a big company that they are servicing, that company would say, okay, is your
company would, I get that, if they go into somebody else's supply chain, but I'm saying if they're not in somebody else's supply chain.
If it's a consumer, they don't need to do anything.
Usha, I can see you champing at the bit.
Yeah, no. I'm just going to add on to what Marietta is saying. That's very true. I could start a new company. And so the first thing is that she's talked about an affidavit where your turnover is between 0 to 10 million. And if you are 51% Black owned or more, right? If you're 100% Black owned, you just get that affidavit downloaded and you complete that affidavit. And you are automatically qualified as a level 1 BEE.
Now, so, to go back to my example, I have a white woman who owns 100% of the company, or white man to make it more difficult. If the white woman owns,
no, it's not really, because even if a white woman owns and her turnover is under 10 million or under 50 million, under 10 million, sorry, she would be a level 4, which is not a bad level to be. So people that are Black owned are a level 1 or a 2. So if you're 51%, between 51 and 99% Black owned, you're a level 2 contributor. And if you're 100%, you're a level 1. But for a white-owned company, you qualify as a level 4 if you don't have any black ownership. So it's level 4 is not a bad level. It depends also what people are wanting from you. So,
yes,
you know,
and
sometimes
what you're trying
to,
yeah, a lot of it must depend on the vision, mission, values, and purpose of the company, and also who the various stakeholders are in a company, and particularly where you fit into somebody else's supply chain and where your customer sits relative to you. So you talked about moving parts. I totally get that. Moving parts go all over the place. So that does create a lot of challenges. Are there, from either of you, are there any imminent changes in the regulations that you're expecting? So we've just seen a whole bunch of changes in the Reserve Bank requirements and exchange control requirements, which is enough to send most people into apoplexy. The last thing we want is more change in regulation, because that just involves having to learn something new. Anything out there?
I think the only one that I've just come across, so with BEE verification, or with BEE generally, there are a whole lot of sectors. So people fall within certain sectors. For example, construction, property, finance, agri, BEE, etc. For all of these years, and then the general, we called it the BEE general codes. So there's a whole lot of sectors, I would say at least about 13 sectors, ICT and MAC and all of those kinds of things. For over the years, all of those sectors have updated their codes. So the codes were updated from about, well, originally 2015 with the general codes, and then the various sectors obviously updated their codes from about 2016 right through. The only sector, which is a large sector in our country, the only sector that did not actually update their codes is the transport sector. And the transport sector is made up of at least about 10 subsectors. From what I know, and I remember many years ago, that the transport sector, they have they call it the committees. They did not actually update their sector code. I just got to learn, I think yesterday, that they're going to be updating the transport sector now to make it relevant now in today's day, and hopefully by next year sometime, that sector code, because every sector has their council, and the councils are responsible for updating and amending their codes. So we're hoping that the transport sector and the Transport Council is going to update their codes, because it's very, very outdated.
Mary, just a question on your side. We're running a infrastructure a seminar, actually in person and hybrid seminar on Tuesday. If companies are coming in from the UK with these ownership issues that you're referring to now, what sort of things should they do? They're sitting here in the UK. Who do they talk to? How do they go about it? What are the things they're going to have to do? And I'm talking now particularly in infrastructure, because that is big ticket money, big ticket investment. It's structured financing. What's the story to that market?
So when companies come to us for ownership advice, we always tell them there's 4 parties that you need to talk to when implementing ownership structure. Doesn't matter how it looks like. You need to be talking to a BE advisor, because there's a lot of legislation that needs to be interpreted and can be interpreted in different ways. You need to talk to legal. There's a lot of legal documents that needs to be drawn up. Auditing and tax. Your auditors need to be involved, because there might be some changes in the way you just make representations on your financial statements. And then depending on how the structure is being made, there could be tax implications. So that's the 4 key stakeholders that needs to be engaged with.
And can I assume that if they are a large investor or the financier, they are going to want to see appropriate BEE compliance?
Most likely.
In the local entity. Just a quick question. we hear about when things change, often we swing too far the other way, and then we swing back probably too far back to where we were, and then somehow over time we settle in the middle. And that's typically how we see regulation applying itself when there are changes or big change that is required. When we go Twin Peaks on the financial regulator, for example. But if we look at our situation now of the BE, what it was intended for, its application, the anger, the adoption or denial adoption, where do we think we are in that curve of evolution of BEE? And is in that a question, will we ever not have BEE? Mariette first and then Usha, because I think you'll have very different perspectives on that one.
I come from a verification perspective or background, so I think we might share some views. I think a lot has been done already, but there's still a lot to be done. With the BE Commission coming in a couple of years ago, a lot of the loopholes or fronting practices are being addressed, and that is being cleared. That still needs to find its way into regulations, or into the codes. So we're probably going to see another set of amended codes within the next couple of years. How drastic it will change, I don't think it will be that drastic. The main issues is developing people, and that's where the majority of the points is being structured on the codes, the scorecard. So there might be movement of targets, but the main objectives would stay the same: developing Black people to take part of the economy and as a whole, and to grow the economy.
We talked, one of the questions I asked you earlier. So Usha, do you want to answer that question? I've got another question for you.
Yeah, I think my answer is pretty similar to what Mariette is saying as well, that there's got to be, for me, the one point I want to add onto that as well is that there's still quite a lot of fronting that happens. I know that as a verification owner, I've come across people sending me BEE certificates, which we probably did about 5 years ago, and people have just adjusted it. Of course, we know how we prepare our certificates. People adjust it. This is the problem with tenders, where people are applying for tenders and they are providing certificates. And twice it's happened to me, where it's come back to me to say, please validate your certificate. And I said, that's not valid, because there clearly was fraud here, because my signature is on it, but we have specific ways in which we put in our dates and our numbers, our certificate numbers, and it was very clear. And it's happened a few times. In fact, quite a few years ago, I reported it to the BEE commissioner. It took about 5 years before I got a response.
Oh, goodness me.
But I knew that
supply chain.
I knew that the certificate was forged, So terrible. That's the problem, yeah.
One last quick question before we're going to run out of time. The skills development, you said, is one of the biggest challenges, because they have to spend money. One of it will also means I've got to resource a whole area of my business doing something that is not in the delivery of my income chain. Can an organization outsource that whole project and say, okay, my 1% is 1 million, here's your 1 million, and this is what I expect of you, and this is how I want it back? Is that realistic? Is that approved?
Yes, there's lots of skills service providers. It's just about making sure you're getting the right one, and you're not getting somebody, and that you're not getting somebody that's it's happened to me in my business as well. Yeah, there are some service providers that are actually not kosher. They're not doing it correctly. They're making a lot of money. But there are plenty of skilled service providers that do the learnerships, because that's where it's easiest to get your points there. So I would suggest to anybody who's wanting to embark on that to make sure that they check it out. They check out the service provider, especially for skills development.
Mariette, closing comment on that or any other topic you wish?
So definitely there's a lot of training providers. One of the services that we've done for our members is that we've vetted some of these learnership service providers. We've done the due diligence part, so they can contact us and we just refer them. And then there's a couple of companies that do implement bursaries as well for students at universities. So definitely can be outsourced.
Right. And then you do you still get your full BEE points for that?
Correct. So the outsourced function, the management fee, would form part of your running your skills development department. Most rating agencies would allow that spend to pass through your scorecard.
But Sharon, just want to add, complete that one. Your skills development scorecard is made up of different types of training as well. Learnerships is one of them. Right. Because there's formal training, there's informal training, there's bursaries and all those kinds of things as well. But a training provider can cover most of those.
So that's accepted. Well, ladies, thank you very much. Arlene, thank you for putting this together with us. You're welcome to join us for the few seconds. Thank you very much for the insight. I found it absolutely fascinating, as I always do. It's an area that I have had a very, very minor little touch with, where I've had to get a certificate as well and go through that process. So I know exactly what you're talking about. And also, I find whenever you're doing tenders or procurement or anything like that, you find that out at the last minute. You don't register 3 months in advance that that's something you need until it's invariably very late. But warning to everyone is just beware of making sure things are done in the most appropriate manner. And there are 2 people in front of you, 2 organizations in front of you, 3 people you can turn to for any form of advice and guidance, so you don't make any unnecessary mistakes. So thank you to our audience for joining us. Thank you very much to Arlene, and importantly to Marietta. Thank you for your presentation. And Usha, you brought a fantastic, contrary, different perspective to the same set of problems. Thank you very much.
Thank you, everyone. Thank you, Sharon.
Thank you. We see you all next month.
Thanks.
See you next month, and enjoy the weekend and stay safe. Bye.
Bye.
Thank you.
Bye-bye.
Cheers. Bye.